In this video, we're going to show you 6 strong Vanguard ETFs that can help you during tough market times. These ETFs can lead you to a safer financial future and usually do better than the market, especially when the market is shaky. We'll introduce ETFs that can grow your money and also pay dividends. Near the end, we'll highlight an ETF that might turn your investment into over $20 million and give monthly dividends that are higher than what many jobs pay in a year. Let's start. We picked these ETFs because they are really good at turning $10,000 into a lot more money over time. Starting at number 6, we have the Vanguard Growth ETF, known by the ticker symbol VUG. This ETF is your first pick of the year. With a current dividend yield of 0.6%, it might not seem too impressive at first, but for a long-term investment, several key factors come into play. First, there's the current dividend yield. Next, you should look at how much this dividend grows each year. For VUG, it has a 10-year CAGR, compound annual growth rate, of 3.46%. Also, consider how much its value has increased, which you can see from its performance over the past decade. VUG's share price has grown by an average of 13.56% every year for the last 10 years. If you invest $10,000 in VUG, after 1 year, it will be worth $11,415, including $59 in dividends and a total capital gains of $1,415. The real magic happens when you reinvest those dividends and let your capital grow. In 5 years, that same investment will be worth $19,433, paying an annual dividend of $119. After 10 years, with reinvestment, your initial investment will be valued at $37,973. In 20 years, it becomes $147,933. And in 30 years, it is a staggering $597,288, paying about $711 per month in dividends. How does $10,000 turn into over $500,000? It's not just the initial investment, but also reinvesting dividends for 30 years. In the case of this ETF, the total dividend adds up to $53,393 over that period. VUG has been around for nearly 20 years, managing over $88 billion in assets. It focuses on large American companies with high growth potential, especially in the tech sector. The ETF avoids buying all stocks at once to prevent price volatility. It has a very low fee of 0.04% and is highly liquid due to its demand and supply. Major investments are in tech, with top holdings in Apple and Microsoft. VUG is a solid choice if you believe in the growth of the major American companies, particularly in technology. Next up is the Vanguard Mega Cap Growth ETF, known by the ticker symbol MGK. This ETF offers a dividend yield of 0.52% and a 10-year annual dividend growth rate of 2.07%. However, its real strength lies in the average annual return of 14.41% over the last decade, indicating a focus on capital growth over income generation. Let's break down the numbers. If you invest $10,000 in MGK, in 5 years, your investment would be valued at $20,080, which includes $10,080 in capital appreciation. In 10 years, that amount raises to $40,431. Fast forward to 20 years, and with reinvested dividends and capital growth, your investment balloons to $165,385. In 30 years, it skyrockets to $686,189. While the dividends are modest, MGK primarily aims for capital appreciation. So, what's MGK's strategy? It's simple yet effective. Investing in the largest growth stocks in the market. These mega cap companies are well established and have held their leading positions for a long time. The ETF tracks the CRSP US Mega Cap Growth Index, giving investors a convenient way to diversify their portfolio with these top-tiered growth stocks. MGK's portfolio comprises 98 holdings, with the top 10 accounting for 60.9% of its assets. Apple and Microsoft are at the forefront, making up a significant part of the fund. While technology stocks dominate MGK's portfolio, it also includes investments in other sectors like pharmaceuticals and payment networks. Next, at number 4, we have the Vanguard Russell 1000 Growth ETF, known by the ticker symbol VONG. This ETF offers a current dividend yield of 0.76%, growing with a respectable 10-year CAGR of 5.67%. Like many others, it prioritizes long-term growth through stock appreciation, evident in its consistent annual stock appreciation rate of 14.37%. Let's look at the potential growth. If you invest $10,000 in VONG in just 5 years, your investment could double to $20,343. And it gets even better. At the 10-year mark, your reinvested investment, aided by the dividend growth rate and average annual returns, could grow to $41,918. In 20 years, the projection is an impressive $187,911. And in 30 years, it's forecasted to soar to $945,695. How is this achieved? You would be reinvesting $165,261 of dividends over 30 years, combining your initial investment with the reinvested dividends to grow at an average annual return of 14.37%. VONG stands out for its low fees, around 0.08%, and its history of performing well, often beating the S&P 500 index. It primarily invests in growth stocks, which generally perform well when the stock market is up. With a diverse portfolio of 443 different stocks, primarily in the tech sector, VONG has seen average earnings growth of about 23% per year. Apple and Microsoft are significant holdings in this ETF. Despite initial skepticism, VONG has been thriving, even with rising interest rates, gaining about 26% this year. This success is partially due to investors valuing these stocks more, even in challenging economic conditions. Overall, VONG's success is a testament to its effective market strategy and diverse portfolio. Next, at number 3, we have the Vanguard Mega Cap ETF, known by the ticker symbol MGC. This ETF is one of your top picks this year, offering a current dividend yield of 1.45%. While this might not seem very high, it's important to consider its long-term growth, with a 10-year CAGR of 6.43% and a solid average annual yield of 12.26%. Here's the breakdown of the growth potential. If you invest $10,000 in MGC, after 1 year, it would be valued at $11,372, including $145 in dividends and $1,227 in capital appreciation. The real growth starts when you reinvest these dividends. In 5 years, your investments would be worth $19,256, paying an annual dividend of $337. After 10 years, with reinvested dividends, the value would rise to $38,000 $177. In 20 years, it would reach $170,935. And in 30 years, an impressive $1,027,685, paying an annual dividend of $82,400 or about $6,872 per month. How does $10,000 turn into over $1 million? It's not just the initial investment. Over 30 years, you would have invested dividends totaling $381,202, combined with your initial $10,000 investment. Together, these grow to over $1 million in total value, paying out $82,460 annually in dividends. MGC's portfolio is diverse, with significant investments in tech, healthcare, and financials. The top 10 companies comprise almost 30% of MGC's holdings. MGC carries a Zacks ETF rank of 3, hold, factoring in expected asset class returns, expense ratio, and momentum. This ETF shows the potential to turn $10,000 into over $1 million. But there are even more potential ETFs ahead. Stay tuned for one at the end that could take your valuation over $20 million. So, returning to our list, at number 2, we have the Vanguard SP 500 Growth ETF, known by the ticker symbol VOOG. This ETF offers a moderate current dividend yield of 1.08%, increasing at a CAGR of 7.83% each year. For long-term investors, its main appeal lies in growth through stock appreciation, as evidenced by its average annual stock appreciation rate of 13.32%. Let's look at the numbers. If you invest $10,000 in VOOG, in 5 years, your investment will be valued at $19,823, with an annual dividend of $273 and capital appreciation of $9,823. After 10 years, your reinvested investments would be worth $40,410. In 20 years, the total value would reach $192,667. And in 30 years, it would grow to an outstanding $1,301,686, paying an annual dividend of $113,776 or about $9,481 per month. How does a $10,000 investment transform into over $1.3 million? Over 30 years, you would have reinvested dividends totaling $479,913 into the ETF, which compounded to over $1.3 million at an annual average return rate. What's the strategy behind this ETF? VOOG is designed to mirror the S&P 500 index, which includes 500 of the largest companies in the U.S. stock market. What sets VOOG apart is its focus on the companies poised for significant growth, particularly in the technology sector. This is why 31% of the ETF's investments are in tech companies. Tech stocks have been performing exceptionally well due to their high future earnings potential. Besides technology, VOOG also invests in consumer and communications companies that are outperforming the overall stock market. Additionally, this ETF has low expenses with an expense ratio of 0.1%, and its high liquidity in the stock market makes it easy to buy and sell. At the top of our list is the Vanguard Information Technology ETF, known by the ticker symbol VGT. This ETF is an excellent choice for those seeking exposure in the technology sector. As of the year-to-date (YTD) performance, It has delivered a strong return of around 34.8%. Before we explore what you can earn from this ETF, let's understand why it's a top choice. VGT's strategy is centered around tracking the MSCI US Investment Market Information Technology 2550 Index, encompassing a broad range of U.S. technology companies of various sizes. This fund, with a solid track record of over 22 years, manages more than $57 billion in assets, highlighting its stability and credibility. In terms of historical performance, VGT has consistently outperformed its peers over various timeframes. For instance, over a 10-year period, it has achieved an average annual gain of 19.17%, surpassing popular alternatives like XLK, SCHG, and QQQ. This consistency is due to its strong historical returns, placing it among the top performers in its category. Now, let's look at potential earnings. VGT has a current dividend yield of only 0.75%, but its real appeal lies in its high dividend growth rate, with a 10-year CAGR of 14.41%. Additionally, the fund's share has been growing on an average by 19.17% annually. Based on this, if you invest $10,000 in VGT, after 5 years, it would be worth $25,171, with an annual dividend of $307 and a capital appreciation of $15,171. In 10 years, thanks to the higher dividend growth and annual yield, your reinvested investment could grow to $66,308. In 20 years, it will be $645,405. After 30 years, the total value would skyrocket to approximately $23.9 million, paying an annual dividend of around $6.5 million, which translates to roughly $543,000 per month. The jump from a $10,000 investment to over $23 million might seem unrealistic, but the math is sound. It's not just the original $10,000 at work. It's also the reinvested dividends growing at 14.41% each year, coupled with the massive 19.17% annual appreciation rate. With an initial investment of $10,000, you would be reinvesting all your dividends, which over time would be valued at approximately $1.6 million. These combined efforts significantly contribute to achieving a valuation of $23.9 million. This ETF's impressive performance from the very first year demonstrates its potential as a top-tier investment choice.